Foremost means more. More training, more information, more ways to grow your business. Find out what Foremost can mean for you at foremostagent.com. Click on Foremost Means More.
It can be difficult to understand all the different risks involved in underwriting financial institutions, and many insurance carriers find this space too volatile and challenging. But Crystal & Company's Executive Vice President, Sandy Crystal, says that as a book of business, it is still a book that has been stable. He sat down with Insurance Journal's Young Ha at a recent Professional Liability Underwriting Society conference and told him what he thinks the best opportunities are for carriers and brokers.
Well, it's been a volatile space, and it's always been a volatile space. You know, the credit crisis most recently has caused a lot of claims, but you could go back only a couple of years before that, and you had the mutual fund market timing late trading issue that caused a lot of claims in the financial institution space. Before that, investment banking issues in terms of the analysts, the investment bankers, and issues that Spitzer had raised. And on and on and on. So there's always been issues. It's always been a volatile space, which I think has always caused concern with the underwriting community. And I think there's headline risk as well. Day doesn't go by where a financial institution isn't in the Wall Street Journal or other press for issues that make people nervous. And so all of those things do tend to lead insurance carriers to find it a space that challenges them. But as a book of business overall, it is still a book that has been stable. And as we talked about on the panel, it's very important to differentiate the risks. The financial institution space is a huge area. It's not just banks, it's money managers, it's funds, mutual funds, hedge funds, private equity funds, it's insurance companies, it's real estate investment trusts. There's so many segments of it that it is important for carriers to drill down, find the areas that they feel they have an expertise in, to be able to underwrite it. As a broker, you know, our job is to make sure that the carriers understand the risks that they're doing and don't overreact to the problems that may not be there. On the broker side, I'm not sure that the carriers always agree with me when I say one thing is safer or one thing is more risky. But I think historically the very large money center banks has been an area that's been harder for the carriers to get their arms around. I think certainly as well the very large private equity firms as well. There are a lot of moving parts there, and it's harder I think for the carriers to get a sense of what the risks are there. It's not to say that large is more risky and small or mid-market is less risky, but they may be less complex, which makes them easier to underwrite from the carrier's perspective. We are, if not the largest, one of the largest brokers in the alternative asset management space. We see a large perspective on hedge funds, private equity funds, venture capital funds, and the like. And again, it's an understanding. You know, people tend to think that hedge funds are, you know, high risk. If you read the Wall Street Journal, they tend to constantly be referring to hedge funds as, you know, loosely regulated, you know, highly leveraged, risky vehicles, and that's really not the case. They are sophisticated money managers. They tend to have one or two investment strategies that they stick to, as opposed to a broad, diverse money management firm, which arguably is a safer right from the insurance community. So, you know, for us, I think the opportunity and the challenge, you know, is a challenge. It's making sure that the carriers understand the risks and don't overreact and paint with a broad brush. And I think the opportunity is that because it is an area that's not as well understood and does scare some of the carriers, for a firm like ours that does have a lot of expertise in the space, it creates a lot of opportunity to be able to better represent those firms in the marketplace. Look, I think what clients want, they want our advice. As brokers, our job is not just to place insurance, it's to give advice to our clients. And that goes into advice on the exposures they have and the best ways to address it, the way we would recommend structuring their program, but also advising what's going on in the marketplace. And, you know, and telling them the truth. I think you can't be scared to tell the clients if the market's turning, that the pricing may go up. You need to be able to articulate why, what the best methods to mitigate any issues there may be in the marketplace, and the value to the actual insurance policy they have. And so I think that the best advice is, again, it's to talk to clients and to talk to them early, to be able to articulate clearly why, and then how you're going to address the problem in the marketplace. And in a lot of instances, the best way to do that is to talk to the underwriters and to be able to understand the risks that they have, or the concerns they have with the risks that they perceive, and to talk them through it. and to mitigate those risks as best you can.